sovereign accumulation than retail. As someone who's in the retail space, I would tell you I'm almost positive it is. And it seems like these traders certainly know the information. You now have Morgan Stanley moving away from a 60-40 stock bond allocation, as Wall Street has talked about forever, to a 60-20-20. Citing again, they expect sell half your bonds and buy gold. You have Michael Hartnett from Bank of America saying 25, 25, 25, 25. Stock, bond, short-term treasuries, gold. You got Jeffrey Gundlach saying 25% gold is not overweight. There's more and more clues out there from big money that seems to be now rethinking gold, but the money that has been front-running this, the most well-informed traders in the world, seem to have known this was coming. And I guess my question to you is, with all of the record deliveries on COMEX, massive, and the shrinking inventories on the LBMA, you think this is part of a deliberate move to reshore and reprice gold? Or
Something significant is in the process of developing within the global financial system. Additionally, it is situated within the vaults of the LBMA in London. The London Bullion Market Association, which serves as the epicenter of global gold and silver trading, is currently experiencing enormous pressure. Andy Schectman cautions that the failure of a single major bullion bank to deliver silver could have a profound impact on the global economy, precipitating a chain reaction that is significantly more severe than that of 2008. Because these are not merely bullion institutions, they are the same megabanks that oversee global credit, regulate derivatives, and stabilize currencies. Silver defaults could result in the loss of confidence and the unraveling of all associated assets. Therefore, why are silver prices still being held down in the face of escalating global inflation, debt, and military spending? According to Schectman, it is not a market accident. It is intentional. The BRICS nations are exploiting paper manipulation to drain Western vaults. The military-industrial complex uses it to keep silver inexpensive, and the end of silver suppression could unleash the most violent financial reset in modern history. These factors will be discussed in this video.
For the last 5 or 6 years, and kind of leads me to my next question. We're seeing record physical deliveries on COMEX and shrinking LBMA inventories. To me, that looks more like sovereign accumulation than retail. As someone who's in the retail space, I would tell you I'm almost positive it is. And it seems like these traders certainly know the information. You now have Morgan Stanley moving away from a 60-40 stock bond allocation, as Wall Street has talked about forever, to a 60-20-20. Citing again, they expect sell half your bonds and buy gold. You have Michael Hartnett from Bank of America saying 25, 25, 25, 25. Stock, bond, short-term treasuries, gold. You got Jeffrey Gundlach saying 25% gold is not overweight. There's more and more clues out there from big money that seems to be now rethinking gold, but the money that has been front-running this, the most well-informed traders in the world, seem to have known this was coming. And I guess my question to you is, with all of the record deliveries on COMEX, massive, and the shrinking inventories on the LBMA, you think this is part of a deliberate move to reshore and reprice gold, or even partially back treasuries and restore global trust, as Judy Shelton has told me twice now, once to me and once to Michelle McCory on this show, that on July 4th, 2026, she says, and has publicly been saying all along, that she believes Trump will tie the back end of the Treasury market to gold. What that would say to me is, yeah, you can bring back manufacturing with no upfront borrowing costs, where the redeemability is in gold in 20, 30, 50 years. She said they'll even make a 50-year with the Stablecoin Act running the front end of the market. Do you think gold is being reintegrated into the system here in the States? Possibly. And maybe even across the globe as a settlement system with the BRICS nations? Big question, but really what I'm saying is gold now transitioning into the monetary system by the massive inflows we see coming into the United States, or is it just simply arbitrage and tariff threat? That Michelle McQuarrie is here now is because one of the things that I have found particularly distasteful, regardless of my opinions on Bitcoin, is the constant divisiveness between the two camps, the mutual exclusivity. I admire that about you and Mike, in that I know Mike is someone who believes deeply in precious metals, but has an opened enough mind to look at the other side. I don't think you ever grow unless you listen to other people's viewpoints. I am not saying that I am someone who advocates for Bitcoin, but what I am saying is that the communities should be, I think, united rather than divided, as the message that we focus on is largely the same. In fact, I was looking at your X page, and there was one comment where you had commented on, the guy said, Bitcoiners know Bitcoin better than gold, and they know the reasons to own gold better than the gold bugs do. Now, I don't know that I agree with that or not, but what I'm saying is that largely we see the world through the same lens. Choosing the vehicle, one that maybe focuses more on profit and the other on preservation, well, to me, that sounds like a marriage made in heaven. I guess all I'm trying to say is that I think that it's a mistake to ignore Bitcoin every bit as much as I think it's a mistake to ignore gold and to poo-poo it. And I think learning from people like yourself about Bitcoin's role is important. One of the reasons I wanted to have you here and ask you, and I guess here is the big question. It's unequivocally known that Tether is stacking Bitcoin alongside gold. To me, and I don't, I signal out Tether because they're backing, largely they will back all Bitcoins with U.S. treasuries. In fact, they're already compliant to the Genius Act, and in backing it with U.S. treasuries, they get to keep the interest that is accumulated. They can't give that interest back to the stablecoin holder. With it, it appears as though, with the $8 billion in gold they have already and their attendance at the Beaver Creek Mining Summit, they're going right to the miners, and they're also buying Bitcoin. They own a lot of it. So to me, that feels like a signal. It's not just a hedge. And if sovereigns begin accumulating Bitcoin, we haven't seen a lot of that yet, but again, you got Senator Lummis from Wyoming who is advocating for this. In fact, revaluing gold next year, part of the executive order talks about revaluing gold, selling some of it off to buy Bitcoin. Regardless how people feel about Bitcoin, my question to you is could it become a tool to recapitalize balance sheets or maybe even help offset the United States debt if companies like Tether are accumulating it through the synthetic demand accumulated through the movement of money on the Genius Act? Look at Bo Hines connected to this system. Could this all be part of recapitalizing or even paying off the $38 trillion in debt and the $175 trillion in unfunded liabilities? I guess is what I'm kind of getting at.
The precious metal system is experiencing genuine fractures on a global scale. This is a historic first. Gold has surpassed $4,000 per ounce. Silver, on the other hand, has been repeatedly beaten down, only to rebound to $50, its highest level in more than a decade. Records are being broken in terms of physical demand. Mints are currently unavailable, refiners are experiencing a congestion, and premiums for immediate delivery have increased. Nevertheless, the paper price continues to be relatively low. In fact, that is the manner in which the system is designed. Schectman reveals that the most concentrated short position in any commodity in history is held by 8 Western institutions, including J.P. Morgan, HSBC, and BlackRock. They have been manipulating the price of silver for years in order to ensure that governments and defense contractors can obtain metal at a reasonable price to discourage investors and to create the appearance of weakness. Silver is not merely a metallic substance that is highly reflective. It serves as the foundation of contemporary warfare and sophisticated technology. It is essential for every F-35 aircraft, cruise missile, and satellite guidance system. Schectman emphasizes that this is the genuine motivation for the suppression. The military-industrial complex is unable to purchase silver at a price of $200 or $300 per ounce. Therefore, Western governments covertly facilitate the bank's ability to maintain low prices by inundating the market with paper contracts that do not correspond to actual metal, the irony. While simultaneously shorting the same metal they are intended to hold, both J.P. Morgan and BlackRock serve as custodians of SLV, the world's largest silver ETF. Silver that does not exist in corporeal form is represented by more than 81 million shorted SLV shares. The prospectus of SLV itself cautions investors that they may never receive their bars in the event of a genuine delivery crisis. In the interim, the LBMAS archives are rapidly depleting. They have decreased from billions of ounces to approximately 150 million. However, the paper asserts that the quantity of ounces sitting against that total exceeds to billion. London trades approximately 600 million ounces of paper silver each day. In other terms, there are more than a dozen phantom ounces on the books for every genuine ounce in the vault. Although delivery periods in London are intended to be next day, they have been extended to T+8 weeks for the majority of 2024. Truck shortages and personnel deficiencies were the primary sources of blame for officials. However, Schectman asserts that this is a code for one item: they do not possess the metal. In addition, the BRICS nations, particularly China, are employing this suppression against us as Western vaults are being emptied. They are awaiting delivery, utilizing physical silver instead of rolling paper contracts and depleting Western reserves ounce by ounce. China, which is currently the second largest producer of silver on Earth, is purchasing semi-refined d'or bars directly from Latin American mines in Peru and Mexico. In order to guarantee a long-term supply, China is paying prices that are up to double those of Western countries. They're transporting these ingots back to China, where they will be refined domestically and stored in state reserves. For what reason? Due to their awareness of forthcoming events. A global reset in which paper promises will be rendered irrelevant. Schectman cautions that the LBMA could be subject to a default if even one of these significant bullion banks, such as Standard Chartered, HSBC, or J.P. Morgan, fails to deliver. This would be catastrophic. The global finance system is interconnected by these institutions. Derivatives, currencies, and sovereign debt markets would all be affected by a default in that location. The confidence in paper metals and, by extension, fiat currencies would be shattered instantaneously. This is the reason why the United States government has discreetly begun formulating proposals to reclassify silver as a critical mineral. They are aware that it is in short supply and are rushing to acquire it before the next supply disruption occurs. Schectman's message is straightforward and sobering. A market can be manipulated for an extended period of time, but it cannot be sustained indefinitely. Fast, brutal, and permanent repricing will occur when physical reality surpasses paper falsehoods. Silver will not simply increase in value when that day arrives. The system will be repriced by itself.
Demand for the U.S. Treasury, you could argue, bring us into the digital surveillance state. That's a topic for another discussion. You got Tether's moves, and Bo Hines, who was just on the administration, kind of like Stephen Mirren being an advisor to Trump and now the architect of the Mar-a-Lago Accord, which advocates for a weaker dollar for manufacturing purposes. Now at the Federal Reserve, these lines are being blurred. You got BRICS building new trade rails, and gold and Bitcoin moving into strong hands. And when you look at the moves by the BRICS, largely through the expansion of the Shanghai Gold Exchange into multi-jurisdictional vaults, trading with one another outside the dollar, settling imbalances in gold. Are we watching a coordinated reset? Or are we watching, to your point, you mentioned that, a reset or some sort of a new system, or are we watching a collision where the market, maybe like you mentioned, where we could get rid of the fiat system, where the market itself decides what money comes next? We're going to hope our paths cross and sit down and do this properly over a beer or something and talk about the world. I like your open-mindedness. I guess that's really what appeals to me, is that I've been trying to connect the two communities for a very long time, also going all the way back to Andy Hoffman 10 plus years ago, about 8 years ago, when it was his idea, and I thought it was great to connect the two communities. And I like that your open-mindedness has led you to the same idea, that we're all fighting the same fight. We all look at the world in many ways in a very similar fashion, and the divisiveness is counterproductive. So with that being said, you have my respect, and working with a really good dude in Mike, again, my respect, and hope you guys continue to do what you're doing and get your information out there, which leads me to, before we close, to last question. And that's to tell us about your new 6-part series. I watched part 2 yesterday. It was fantastic. Tell me about what inspired it, what it's about, and how does it connect to the big themes maybe we've been talking about today. What do you want people to take away from your new 6-part series? Why don't you tell us a little bit about it?
Which is currently the second largest producer of silver on Earth, is purchasing semi-refined door bars directly from Latin American mines in Peru and Mexico. In order to guarantee a long-term supply, China is paying prices that are up to double those of Western countries. They're transporting these ingots back to China, where they will be refined domestically and stored in state reserves. For what reason? Due to their awareness of forthcoming events. A global reset in which paper promises will be rendered irrelevant. Schectman cautions that the LBMA could be subject to a default if even one of these significant bullion banks, such as Standard Chartered, HSBC, or JP Morgan, fails to deliver. This would be catastrophic. The global finance system is interconnected by these institutions. Derivatives, currencies, and sovereign debt markets would all be affected by a default in that location. The confidence in paper metals and, by extension, fiat currencies would be shattered instantaneously. This is the reason why the United States government has discreetly begun formulating proposals to reclassify silver as a critical mineral. They are aware that it is in short supply and are rushing to acquire it before the next supply disruption occurs. Schectman's message is straightforward and sobering. A market can be manipulated for an extended period of time, but it cannot be sustained indefinitely. Fast, brutal, and permanent repricing will occur when physical reality surpasses paper falsehoods. Silver will not simply increase in value when that day arrives. The system will be repriced by itself.